$682.6 billion. 9 consecutive months of selling. China just drove U.S. Treasury holdings to a 17-year low, while gold exploded to $4,737 per ounce. But here's what terrifies Washington. This isn't panic selling. This is systematic financial warfare, and China just revealed their endgame. I'm not a financial advisor. This isn't financial advice. This is pattern recognition based on Treasury Department data released 3 days ago. But by the end of this video, you'll understand exactly why China's Treasury liquidation represents the most calculated attack on American economic dominance in history. Let me show you the numbers that prove China is winning. November 2025, $682.6 billion in Treasury holdings, down from $688.7 billion in October. That's the lowest level since September 2008, when Lehman Brothers collapsed and the world almost ended. But here's where it gets absolutely terrifying. China didn't just sell treasuries, they executed the perfect wealth transfer. While dumping American debt, their central bank added 30,000 ounces of gold every single month for 14 consecutive months. China's gold reserves now exceed 2,306 tons. That's 74.15 million ounces acquired through relentless, systematic purchasing. They sold paper promises and bought physical wealth, dollar for dollar, month after month. This isn't random portfolio adjustment. This is the largest monetary system transition since Nixon closed the gold window in 1971. And it's happening exactly as gold hits record highs above $4,700 per ounce. Here's what I discovered that changes everything. China isn't just diversifying reserves. They're building the infrastructure to replace the dollar entirely. The prospect of a politicized Federal Reserve under Trump's presidency has deepened Beijing's concerns over exposure to American debt. More cuts expected. When America weaponizes monetary policy, China responds with mathematical precision. Xiao Yu, chief economist at Fudan University, told the South China Morning Post, "The massive accumulation of debt resembles a Ponzi scheme. China doesn't want to play this game anymore. That's not economic analysis. That's a declaration of financial independence from a $38 trillion debt pyramid that grows larger every day. And their timing is surgical." Gold entered 2026 with renewed momentum, hitting its first record high above $4,600 on January 12th. By January 20th, gold was trading at $4,737 per ounce. That's $1,993 higher than 1 year ago. China accumulated gold while it was cheap. Now it's exploding in value while Treasury bonds face existential crisis. But here's what should absolutely terrify American policymakers. I found the smoking gun in central bank behavior patterns. The World Gold Council survey indicates 0 central bank respondents anticipating reserve declines. 95% of central banks expect to increase gold reserves over the next 12 months. This isn't just China. This is coordinated global abandonment of dollar-denominated assets. Brazil executed 3 consecutive monthly purchases, totaling 43 tons. Poland added 95 tons during 2025. Every major economy is quietly building gold positions. J.P. Morgan Global Research forecasts gold averaging $5,055 per ounce by the final quarter of 2026, rising toward $5,400 by end of 2027. When Wall Street's most conservative institution projects $5,000 gold, well, the old system is already dead. Here's the part that changes absolutely everything. China's gold strategy isn't defensive, it's offensive preparation for dollar system collapse. By systematically adding between 30,000 and 40,000 ounces monthly, China signals long-term policy goal of reducing reliance on U.S. treasuries. 14-month consecutive buying streak represents unprecedented central bank accumulation discipline. That's 420,000 to 560,000 ounces per year, every single year. While treasury holdings dropped to levels not seen since 2008 financial crisis, China's treasury position represents a steep 48% decrease from the $1.32 trillion peak recorded in November 2013. They've systematically liquidated over $600 billion in American debt while accumulating physical gold. And here's why this time is fundamentally different from every previous challenge to dollar dominance. China has something no previous challenger possessed: industrial gold demand supporting monetary strategy. Silver is widely used in manufacturing, and China placed export controls on the metal in December. There's about a $10 premium being paid in Shanghai. They're not just accumulating precious metals, they're controlling global supply chains. When you combine manufacturing dominance with monetary metal accumulation, you create systemic leverage that no empire in history has ever possessed. Let me show you exactly how this destroys American economic supremacy. Step 1. China reduces treasury exposure to minimum operational levels. November 2025, data confirms they're already there. $682.6 billion represents less than 21% of their foreign exchange reserves. Step 2. Accelerate gold accumulation during dollar strength. Averaging 30,000 troy ounces monthly over a 14-month period indicates systematic discipline rather than opportunistic market timing. Step 3. Trigger supply crisis in physical metals markets. Silver export controls force $10 premiums in Shanghai. Physical bars disappearing to China and India. Step 4. Reveal gold-backed settlement system for international trade. When China announces yuan gold convertibility, the dollar dies instantly. The mechanics are already visible. Gold held firm near recent highs as global dollar reserves now sit near 57 to 58%, the lowest since the 1990s. Every Treasury sale by China forces other holders to question their positions. Every gold purchase signals confidence in post-dollar monetary system. Gold briefly touched new all-time highs this week, repeatedly reclaiming 4,600 and printing new record near 4,638. The market is pricing in dollar system breakdown. But here's what makes China's strategy absolutely brilliant. They're not attacking the dollar directly through confrontation. They're offering superior alternative and letting mathematics do the work. JP Morgan analysis suggests if diversification of just 0.5% of foreign U.S. asset holdings into gold took place, demand would drive prices to $6,000 per ounce. China holds $682.6 billion in treasuries. Converting even 10% to gold would trigger that scenario. They have the power to detonate gold prices whenever they choose. The Federal Reserve knows exactly what's happening. Jerome Powell, chair of the U.S. Federal Reserve, is under criminal investigation relating to the $2.5 billion renovation of Fed headquarters. When central bank independence collapses, international confidence evaporates. A dozen global central bankers defended Powell in a statement saying they stood in full solidarity with the Fed and its chair. That's not confidence. That's desperation. And here's the timeline that should absolutely terrify you. Historical monetary transitions follow predictable patterns. Dollar supremacy maintained through Bretton Woods until 1971. Petrodollar system launched 1974. 52 years of dollar dominance. Average reserve currency lifespan, 94 years. The dollar became global reserve in 1944. Well, that's 82 years. We're in the terminal phase. Bank of America raised its 2026 gold price forecast to $5,000 per ounce, citing White House unorthodox policy framework supportive for gold given fiscal deficits, rising debt, and push to cut rates with inflation around 3%. When gold hits 5,000, China's 2,306-ton position becomes worth $370 billion instead of current $220 billion. That's a $150 billion profit from strategic patience. But the real prize isn't profit, it's system replacement. When gold revalues to monetary levels, countries holding physical metal control, international trade, countries holding paper promises become economic colonies. Silver posted its own all-time high of $86.06 per ounce on Monday. Industrial metals following monetary metals signals complete system breakdown. What does dollar collapse look like? Not theoretical, it's mathematical inevitability. Import costs explode, treasury yields spike uncontrollably, stock markets crash in nominal terms, real estate values measured in dollars collapse while gold-priced assets explode. Anyone holding dollars loses purchasing power. Anyone holding physical gold becomes dramatically wealthier. Anyone holding dollar-denominated debt gets crushed by interest rate chaos. Central bank gold holdings have doubled since 2014. Bitcoin enters the chat as digital alternative to gold when trust in government debt fades. But here's what really keeps me awake at night. China didn't just plan for dollar collapse, they engineered the timing. Trump presidency creates maximum political chaos. Escalating policy uncertainty in the United States has become an increasingly important factor. Justice Department served grand jury subpoenas on Federal Reserve Chair Jerome Powell. China exploits American political dysfunction to complete monetary transition. When your central bank chairman faces criminal charges, international confidence dies. Gold prices rose 1% to above $4,720 per ounce on Tuesday, setting new record high as US-EU trade tensions strengthen demand for safe haven assets. Every crisis America creates drives more capital into Chinese gold strategy. They're using American chaos against American interests with surgical precision. The current gold rally began in August 2025, when Federal Reserve Chair Jerome Powell signaled willingness to cut interest rates. Between August 27th and October 8th, London spot gold prices climbed from $3,376 per ounce to $4,040, an increase of 19.7%. China accumulated throughout that entire rally. They bought during weakness, they bought during strength, they bought during volatility. Systematic, relentless, unstoppable. Now, analysts forecast that under baseline scenario, gold prices could exceed $4,500 per ounce by March 2026. We're already there. The forecast models are breaking down because they can't account for systematic dollar abandonment. This isn't economic warfare. This is economic surgery. Systematic removal of dollar dependence while building gold-based alternative. China's $682.6 billion Treasury position represents minimum operational exposure. Their 2,306-ton gold position represents maximum strategic advantage. Goldman Sachs analysts maintain projections for continued institutional demand, forecasting average monthly central bank purchases of 80 tons through 2026. China represents the largest component of that demand. The consistency of China's monthly acquisitions indicates institutional commitment regardless of short-term price fluctuations. This pattern suggests they'll continue buying until they achieve complete monetary independence. The long-term trend of official reserve and investor diversification into gold has further to run. We expect gold demand to push prices toward $5,000 by year-end 2026. J.P. Morgan Global Research. You just watched the most systematic monetary transition in human history, not driven by war or revolution, but by mathematical precision and strategic patience. The dollar's 82-year reign as global reserve currency is ending, not because China destroyed it through force, but because they built something superior and let economic gravity do the rest. History will mark January 2026 as the month China's gold ultimatum became unstoppable reality. The mathematics of power have shifted permanently. When gold hits $5,000 per ounce by December 2026, China will control the new monetary system. While America struggles to maintain relevance in a post-dollar world, the greatest wealth transfer in human history is complete, and you just watched it happen in real time. This is how empires die in the modern age, through precision and perfect timing.